Boom. Okay, I'm live. Let me move this to live chat. I'm gonna put up the link tree. Let me put it on Do Not Disturb so you don't get annoyed with all the texting that's currently going on. Where's my link tree? There it is. We're going to share, copy. It is copied. Morning, Joe. I was just about to say good morning, Joe, because you're always the first one to say good morning. And I'm going to go to YouTube. And we'll go to my channel. And then I'm going to pin message. And then we're going to go over to, I think, let me make sure Big Head's on. Big Cam is on. We're going to go Active Trader Pro. And properties. There is Active Trader Pro. I want to make sure the Big Cam is on. Oh, okay. I got to turn on my... Here, this is the difference when the light goes on. Boom. Now you can see your boy. Let's go to Active Trader Pro. I'm going to move that up there. We are going to track HIBS because I want to sell when it loses its confirmation. So it is moving pretty well in pre-market. Listen, at $4, if I get to $4.40 and get a nice 10% profit, your boy's happy. Florida, you'll be in my time zone, Joe. But you'll be on vacation, so trust me, I don't. If you're wondering, let's go back to Big Head over here. Yesterday, this is I use Bard and ChatGPT depending on where I'm at, or kind of how I'm feeling. I think both are very good products. But yesterday, I said, "Does PE affect stock price?" And I did this, and then I went to notes, and I wrote this note about PE and I included FinViz, two charts, and the charts are essentially, and boy, Substack's not pulling it up. This is the year-to-date performance, so you can see the green way over here and the red kind of way down over here. You go to the next and look at the PE. The red are the large PE. The green are the super low PE. So it's completely opposite the way I was looking at it. And so to me, when somebody brings up, specifically me, sometimes when I say, hey, the PE is high, like for instance, we talked about yesterday how the PE is high in Tesla, and how the PE is super high in NVIDIA. And that it kind of, if you like the company, you like the stock, it shouldn't matter. And I-95 is opening up in Pennsylvania again today. Hit the thumbs up button, by the way. Let's see. We're going to do some scans. I am going to sell HIBS today. I am not holding a triple levered ETF into the weekend. If you are that kind of person, I commend you to having the fortitude of that one. And I did want to show people here on TrendSpider. I am going to go to Little Head here because I want to show you the 65-minute scanner. Oh, come on. Is this really going to do this again? Yeah. Listen. Your boy is one of those dumb people. Makes me look smart. Although last year, last year I had some good calls. And this is just not working. Why is that not? I'm not frozen, am I? Nope. Let's go to TrendSpider. Is TrendSpider down? Nope, it's not down. I think it's just a little bit slow. We're going to go to Market Scanner. And I did want to show you, this is what I did this last night. I went to my 65-minute scanner. Morning, Sherry. Morning, William. And down here, you'll see in the bottom right, I think you can see it. Let me make sure. Yeah, the bottom right. So when I do the 65-minute scanner, it's just looking for anything that is currently in the core portfolio. There's your core investment group that I've made, and I share with you. But which ones are actually buys within the 65-minute algorithm? So, for instance, Roblox, which is under 40 again. If you go into Roblox and you go back to Strategy Tester and then you go into the 65-minute algorithm and you look at this, it just got a buy-in. It's under 40. I mean, this one is like Mara. When's it going to pop? I don't know. Probably will, though. I'm looking at, okay, I've got everything that I need up there. Okay, let me collapse the indicator list. Now, the other thing that I was looking at last night was the Fear and Greed Index. Look at that for... This is a fear and greed index. If you want to read about it, let's see. TrendSpider Fear and Greed Index. High-level signal of the overall market sentiment for Bitcoin. This index generates a score between 0 and 100. On the other side, when the index measures greed, the FOMO, fear of missing out, blah, 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 it's basically... can add the crypto as a lower indicator on the chart. It's basically a Bitcoin thing. So where do people feel comfortable today? It's greedy. People are being greedy. Now, down here is really when you want to buy. This is where you're going to get the bump out. And I like this fear and greed index. So... now, how do I remove it? I think, do I just hit this? Yeah. Okay. Just need to pull that off. But when you go to this scanner, this is what I wanted to show you. All of these 65-minute ones in the main algorithm, the main core investment group. Amazon is in. Coke is in. Merck is in. Walmart is in. Walmart is one that's just crossing up on the MACD there on a 65-minute chart. If you go to a 4-hour chart, you can see the MACD is still moving downward. Amazon. I know I said under 120, man. You got to be patient with that one, but I mean, they have big news yesterday as well. Yeah, today's Friday. Here's my take on today, Sherry. And I think I say this in my notes. Let me see. No, I don't say it. I think I said it in my stuff yesterday. I'm shocked at all of the Fed talk that went on yesterday. With Jerome Powell's testimony and stuff like that. Christian, no, you didn't. No, you did not. I'm going to go to scanner. Let's go to the main scanner here, brokerage holdings. But I'm shocked at the amount. Ooh, UNH. the amount of negative talk and the ability of this market to shake off anything from the bears. It's clear the bulls are in charge. It's clear that when the bulls get that fear and greed index, as the greed gets up there, it could be a little bit scary. But let's see. Wow, there's nothing that. Oh, look at that. Activision. After their first day in court yesterday. Going to fill that gap. Gap to 85. That's an interesting one. Not owned. We'll go into the ARCs to see if there's anything that piques my interest in the ARC fund stuff. Not really. Most of the ARC fund stuff I actually follow. Let's look at the Dow. Dow. UNH, only one. Let's look at NASDAQ. We're going to just type it in rather than scroll all the way down. ATVI is the only one. Let's look at S&P. We'll look at the S&P 100. UNH. So I've got two scans, UNH and ATVI. I did buy yesterday Ulta, which is kind of flat in pre-market. I think I got it at 450, 450, which I don't think is a bad price for it. It's certainly upwards from where the algorithm says to get in at 417. Would have been nice for me to understand, hey, it's going to fill that gap, and it's just too low because any reaction in the market is an overreaction to their earnings. But I wasn't that smart. Although I will tell you, let me go to the Facebook group. Because the Facebook group, I got a message from somebody. I don't want to put all my messages up, but you know what? I'm not going to put them up there. Okay. Marley sent me a message. I'll look at it later. There's my note. I'm already on that one. I don't need to click on that. Oil stocks here. That's what I want to show you. I posted this in the Facebook group. This is my return. And this is Fidelity's performance tracker. If you have Fidelity, this is a key tool to look at all the time. And I'm going to leave this up here because you can see, here's the market indices. Over 1 month, S&P is up 0.43, Dow is up 0.43. I am up 5.2%. The only one that I'm underperforming is the NASDAQ. 3 month, I'm up 16% across the board. Only one I'm missing, well, I'm beating everything. Now, year to date, I'm up 27%. I'm beating it all. And this is my core portfolio. So this is just everything. The only thing I have outside of this entire money is $1,000 in Weeple. So $1,000 ain't going to make a difference in my portfolio. It's not going to bring me down. Now, 1 year, I'm up 19%. This is where you kind of understand a little bit about managing your portfolio. Now, that 9%, this one right here, this is my HSA. And the reason it is underperforming, it is 5-figure HSA. It's not an enormous part of my portfolio. Larry! But I YOLO'd with ARC. I am currently in cash. That's why you're seeing 1 year 3.313%. It is collecting interest. But 9.69%, that is because I just YOLO'd the ARC. all ARK funds. I think I had all 4 of them in this. And that was where I really did poorly. So, but the large majority of it, again, I'm up 17%, 14%. So I'd like you guys to start tracking this, because if you're not at least beating that top one, the S&P 500, maybe throw a good amount of your portfolio into a tracking fund, and trade with some of your portfolio to try and hone your skills up a little bit more. That would be where I would suggest that you kind of go. But, hey, it's your money. You manage it, not me. So I bought Ulta. And Sherry, I'm going to thank you for that video. I watched the video. And I'm going to mention you bought Ulta and ELF. ELF may be the other one. EL is the other one that, with China's not opening, EL is the other one that kind of took a dump after their earnings and probably comes to fill this gap. So, yeah. But when I looked at it yesterday and you go to the weekly, it's still kind of hesitantly. I mean, it's back to where it was pre-COVID. So, this was, hey, we're going to come out of this, and the makeup companies are going to make a ton of money, and China's coming out. Oh, maybe people won't be, the consumers hurt. Maybe they won't make enough. Okay, China's opening up again. Let's go. We're off to the races. Oh, it's not opening up. Let's go down. That's essentially what this is. I mean, you look at the earnings, $1.37, $1.90, 301. The stock price justifies it. Then you look at 47 cents. Stock price justifies it. So you watch that. Let's see. I'm looking at it's big down red. HIBS was the buy. I mean, for the week, listen, it might not have been the greatest buy, but right now in pre-market, it's up 4% at 4.2 to $4.22. Your boy got in at 393 and 4. So I'll be selling this into the day. At some point in time, I'll pick something, a price, and probably be watching this. I like to trade on Active Trader Pro. So the volume isn't huge in the pre-market. It's only 43,000 shares. Typically, it trades about 2.7 million over a 10-day. Yesterday's range was 405 to 416. I'm glad I didn't sell it at the 416 level. It's at 423 in pre-market right now, but again, the markets haven't opened up. So the VIX closed up yesterday, 6.2% at 13. Out later in the year, the future VIX, that's trading a lot higher, indicating we may see. Let me see if I can see it. Here's the VIX midterm futures. See how it's just kind of going down, but maybe that's not. UVIXY is probably the best. UVIXY trades on the future of the VIX. Wow. Oh, UVIXY is staying. It's funny, up here in the upper left-hand corner on the tab part, TrendSpider tells me the percentage. It says the VIX is up 940%. It's not. It's just a matter of it's a reverse split 10 for 1. So rather than being at $2, it is now 10 for 1, $20.60. So that's where that one came in. PXD, I have a list of stocks. Roblox, Disney, PXD, TSM, Uber, Palantir, Baba, Starbucks, and Oh, it's not JN. It's what? CarMax? Yeah, KMX. That's what I want. Their earnings came out, and those guys are popping. KMX. KMX is up 6% on earnings. This is CarMax. Morning, Nevin. If you're new here, remember to hit that subscribe button. Let's see. Anything on here? Oil down. F. That dude's still so. Oh, yeah. Here. Oracle. I'm gonna make mention of this too. It's at all-time highs up here. 127. It's at 120 right now. Here's what you have to realize. Larry Ellison has sold close to $400 million. I'm sorry, close to $500 million. Yeah. Let's see. Where's my note on Oracle? Insiders sold. Yeah, let's see. Value 211. Oh, you know what? I'd say that's close to. Let's see, 246. 246, 15, 650, 700, 800 million. Okay. That's an interesting one with insiders. Selling. Average target price is 122. You're trading at 120. It's just, it is what it is. Tickers. Trendline support. Buck. Stable income. I'm going to put together this weekend a Treasury floating rate. A watch list of the covered call ETFs, because I think it's time. Amazon, CarMax, Apple, big news. Tesla, big news. Meta, big news. I don't even know what the news is on those. It's just, you're over there. Recent quotes, Baba. Okay. Signet Jewelers? Okay. I don't see any news on here. I don't think I'm gonna start the podcast. Why not? It's now 9:12. Okay. Good morning. It's Friday, June 23rd. First off, I have to tell you guys, people have shown up to hit the 5 stars on Spotify. Let me look. Thank you so much for everybody who does that. Thank you also to everybody who's subscribed on YouTube. I've been invited to the partner program. That's huge. With Spotify, we're at 362. I think we started the day yesterday at like 320. So nice 10% increase. You kind of take that if you could, on a stock. So I'm super, super happy with you guys kind of showing up on that. I don't know. I don't check Apple Podcasts all that much. And to be honest, holy hell, it's hard to figure out the how to rate yourself on Apple Podcasts. So they just don't make it very simple. I don't know that it has a lot to do with people finding my show, but whatever you can. I do have an incentive because, and I'll tell you, over this weekend, I will start doing a paid newsletter. Not that you need to pay for it. It is a way of supporting me, but starting, I told you guys I'm going to start like a PDF book, just with things where you can learn, videos that I've watched on YouTube, my setup, and specific like explanations of my setup. Remember, the goal of this channel is not to, hey, here's a stock that you can buy and you should buy it at this price. The goal of this podcast, the newsletter, everything, the Facebook group, it's to create a system for you that you feel comfortable with. It's to basically to train you and teach you how I think of things. It's not to, I got a question yesterday about the Taser company, and the person on Facebook wrote back, but it's a great company. Here's the thing. Am I going to sound excited over a Taser company and a body cam company when 40 years of my investing career has been on tech? I'm probably not going to get excited over a Taser company. And it's not that your choice is bad. It's just you have to realize that when you ask me to look into a stock, and I'll look into the chart, I'll tell you whether it's a good time to enter, whether it's probably a good time to exit. I'll take a look at the PE, look at the overall company. You're getting a 5-minute look. The number one rule of this podcast is don't listen to a douche on the internet. Don't listen to other people. It is your money. So the goal of this is to teach you, A, how to trade. What do the charts say? What do they look at? So understanding that. B, fundamentals matter, but they don't make a huge, huge buying difference in my world. Part of that is I put a note out on Substack last night. And if you don't go to the Substack daily, stockpick.substack.com, you can't read this note because it doesn't come out in your email. It's just a note. But I asked Bard, does PE affect stock price? And I found the answer was pretty, standard. Yes, it does. But then I took a look at FinViz and I took a look at year-to-date earnings versus PE value of a company. So it's just a way of looking at stocks. But if somebody were to ask me, hey, is Target a great company? Yeah, I'm going to tell you it's a great company. I shop there. Do I know everything about Target? No. Do I know who the best cloud chip maker or the best AI chip maker is? Yes, NVIDIA. Do I know who the best consumer products company is? Yes, Apple. Do I know who the largest cloud computing company is? Yes, Amazon. Do I know who dominates search? Yes, Google. It's tech. Tech has been my 40-year investment. So the philosophy that I always had is people are going to use tech. Tech is going to make things easier. It's kind of the Cathie Woods disruption kind of thing. And I've always invested in it. And it has done me well. So please don't take my, it could be better kind of thing. If you ask me to look in Endeavor, anything like that, I could be completely wrong. Many times I am wrong. Yesterday I bought Ulta Beauty. Do I know anything about makeup? Absolutely not. I bought in, it's 5 figures. No, I'm sorry. It's 4 figures, high 4 figures. I just bought some, and if you're not on the Savvy Trader list and you don't know about that, the newsletter has some links to the Savvy Trader portfolios that I put up. One of them is a portfolio of the core portfolio that I have here on TrendSpider. I just bought 100 shares of everything, I think, on Tuesday. And essentially, it's like a $600,000 portfolio. Let's see how it does. If it's up by the end of the year, then the Bob story about buying at the peak of the market is absolutely true. Doesn't matter when you buy, just continue to buy. If it's down, maybe the timing wasn't right. Maybe it's up in 5 years. You're going to have to continue to listen and look at this stuff for 5 years to understand exactly where it's going. But it's a core portfolio of 100 shares of each company. So for instance, Costco trading at 520 is significantly a bigger weight in that than Apple, which is selling at about 180. Because 100 shares of Costco costs you $52,000. 100 shares of Apple costs you $18,000. So equal weight versus a market weight actually makes a difference. But the goal of this podcast is to teach you to think for yourself, understand what you're putting your money into, and taking charge and ownership of your own portfolio. Part of that is understanding where you are compared to the indices. What you're seeing on your screen right now is my return. This is Fidelity. Fidelity tracks this for you. So you can see over 1 month, the S&P is up 0.43. The Dow Jones is down 3.17. The total market is up 0.43. And the NASDAQ composite is up 5.93. The only one I'm not beating is the NASDAQ, and it's only slight. I'm up 5.12. Over 3 months, the S&P is up 5%. Total market's up 4%. The NASDAQ is up 13%. I am up 16%. I'm beating it all. Over year to date, I'm up 27%. The closest is the NASDAQ up 24. 1 year, I'm up 19. The closest is the NASDAQ at 8%. 3 year, I'm up 17%. The closest is the S&P at 12.92. 5 year, I'm up 14%. You'll see a big red here. And just to be clear, that is my HSA account. So this bottom part is the total of the combined accounts. But 3 years, I'm down 9% in my HSA. The reason, and again, timing matters, and when you get in and out matters. I YOLO'd the my HSA into ARK funds, and I wound up getting burned on that. So 2 things. Understand where you're putting your money. Understand what your return is versus the indices. If you are not beating those indices, and if those indices are just blowing your account away, I will tell you, I have family members where the indices blow them away. My suggestion has always been, and it is swallowing your pride, but you have to move a large percentage of your overall portfolio to the indices and then trade the smaller percentage of your portfolio. Reason being is you probably need to hone your skills. And it's not skills like you need to, understand that, buying Apple is better than buying energy over the last 10 years. You get lucky in things like that. I bought energy at the beginning of this year. So far, energy is down. PXD, Pioneer Resources, is down 1.22%. It's under 200. I bought it at 208. But I do understand that the large majority of my buys in my portfolio have been tech, and that's what's winning. So understand, not every purchase is going to make you a winner. You just have to ride the trends, and understanding those trends and getting on and off those things. You don't have to make say the market's up 100% and you're up 50%. You don't have to beat it. You just have to be happy with what you have. If you're underperforming the market, I would tell you, move some to the bigger portion of the market that's actually beating you. So, and that's where the sectors, the spider sectors come into play. Understanding the spider sectors and all of that, I have a watch list on that as well. So go and read that note. It's on Substack about PE. I do think that it's interesting. It's at dailystockpick.substack.com. I do think that it's interesting. Yesterday, I bought Ulta. Well, let's look at SPY real quick. We had that button hook. We are still in on the 4-hour algorithm. The reason is it has moving averages in order to get you out. We're capitulating up here at around 436. Right now, the S&P would open up 433, so it's down slightly, 0.7%. It is probably not coming down to this 427 today, but I would say if I move this volume shelf over here for the short term, if it breaks 434, I think you get down to that 427 level. That's where I think you're going. If you get down below this, towards the bigger shelf area, which is 413, then I think you're in danger of, or I shouldn't say danger, but I'd load up, because the reason it's coming down so much is because your market leaders, Apple, Amazon, Google, NVIDIA, they're all down more than 1%. Microsoft is down 1.3%. The chips are down. Target is even down 1%. Tesla is down almost 2%. I am holding HIBS, HIBS. I will sell HIBS by the end of the day. HIBS is trading right now at $4.22. I bought it at $4. I will get out of this. This is a triple levered bear ETF on the S&P. At some point in time, I will sell this today. Yesterday, I bought Ulta. I bought at $430, $450. Right now, at $450, sorry. It's trading at $455. I'm up slightly. I don't know. I'll hold this one because I do think that, remember I said when you buy a stock, always have your exit plan in mind. My exit plan on the downside would be 440. If it goes down below this gap, I know that this gap isn't getting filled right now, and that gap down here at 426 is going to get filled. If it gets up to the upper side of this gap, which is 483, which would make me about 6%, I believe, 6 or 7%, I'll hold it. It's a good company with good products, with good earnings, and good management. The reason it came down is they just said, hey, we expect it to be a little weaker, the consumer to be a little weaker. Well, again, I wish I'd gotten it at this 417. I'd be doing really well right now. But I waited. 440, 450, I'm okay with. Sherry she bought Ulta and ELF yesterday, ELF. ELF has just been a monster, an absolute monster. But again, Sherry knows makeup. Your boy here doesn't know makeup. The women know makeup. Ask the women in your life about ELF and Ulta. I know Ulta, you go to a mall, the Ulta stores, they're packed. And ELF, ELF is one of the brands that's sold in there. It's just been a monster. There's a video from Yahoo Finance that Sherry sent me yesterday that I actually liked. I watched, made me interested in ELF. Not at these prices. I'd like it to get back down here below 100 to actually get into it. I just don't know that I'll have that opportunity, but it's not one also. I don't use the product, so I'm not you have to be patient. Patience makes the investor. Estee Lauder in the beauty business. This is one that also some of the women in my life have mentioned that they enjoy. It's big in China, and the China not reopening is what killed this one. You can see that gap down there. If this gets to over 200, and it did here, but it pulled right back. It got to, the high was 201.56. 200 is that resistance level. If it breaks that resistance level and starts entering into this gap, I think you fill that gap from 209 up to 240. So I'll be watching this one. I'll set an alert on TrendSpider. Again, TrendSpider, if you don't have TrendSpider and setting alerts, don't sit there and watch charts all day. Set the alert. It's super, super simple. Evercore. Last night, I was listening to somebody from Evercore. There were 3 stocks, he said, and I'll tell you in order that he said. Amazon. Amazon yesterday had a big announcement. They were up. It closed at 130.12. It's trading at 129. I'd like to see you buy it anywhere below 120. We would have to see a market pullback for it to get down there. But I do think even if you bought it up here, if we go and look at a weekly chart of Amazon, you're just at the 200-day. The 200-day right now is going to play some resistance level right now with that. And your resistance is at 132. So it will play some resistance there. If we're going to see a pullback, I think we see it back here to about the 110 level or so. So be patient. That 50-day on the weekly is just starting to turn positive. The 200 is still positive. But this all-time highs are around 180. So I still think that you have room to run. Here's about Amazon. They made an announcement yesterday that they will make a big play, $100 million into the AI space. Essentially, what they've said is they will have an AI partnership that will bring focus to their AWS cloud members. Essentially, just in layman's terms, as I understand it, they are hiring employees and they are partnering with AI companies to allow those people that use the AWS cloud to integrate AI into their business on the cloud. So you're a small company, you want to use the AWS cloud, you're trying to decide between Microsoft Azure, Google, and AWS. AWS is offering you employees and AI services as part of the AWS cloud. You might go with them. So it's a good way. The reason the stock was up yesterday is I think it's a differentiator. I think it's a reason for people to either stay or to move to AWS cloud because let's be honest, AWS, Microsoft Azure, and Google, from a layman's term, it's all cloud storage. It's just servers that are backed up, that are available to you as long as you have a connection to the internet. I think it's huge. So I do want to see you in Amazon. I think Amazon's a winner. I think they don't have a demand problem. I think they have a cost problem, and they will get that under control. Evercore's second pick is Uber. It is down 0.35% today. I know I say buy this under 40. I might buy this over 40. I need to have patience. I know that. I just don't know that it's going to get back under 40. This one, as they come closer to earnings on July 31st, if they announce that they actually made money on July 31st, which they absolutely could announce that. I think you see this as a $50 stock when they announce that they made money. So am I upset that I didn't get it under 40? Probably not. It's probably one that I want to enter in. Another one that I don't own, and the third one that Evercore brought up, is Meta. And I got out of this in December. I got out of this well before December. It was during the gap, and I need to go to a weekly to really show you the gap. Maybe it's a daily. But, it's been a while. I think it was January 2021. It was what caused this one to fall. It was, February 2022. And the market just followed it. But this one goes all the way to 314. You're going to see it cover this gap. And so I think Meta's got momentum. If you don't know about the cage match between Elon and Mark Zuckerberg, Elon's plan is to use the walrus move, which is just to smother little tiny Zuck. My money's on Zuck. Zuck's kind of a monster. And, I don't see Elon actually fighting. I see him more wrestling. I see Zuck throwing punches. I see Zuck as the dirty one. So, but those are the three companies that Evercore thinks: Amazon, Uber, and Meta. I completely agree. I don't think you'll lose on those in 5 years if you just buy them today. LNG, which is Cheniere Energy. I saw Jim Lebenthal talking about it yesterday, and he made sense. He's not doing LNG based on liquid natural gas or any natural gas play. He's doing it on shipping and exporting. So taking cheap natural gas that's here in the United States and exporting it to Europe specifically. We are heading into the winter after this summer, which is a fact. If somebody wants to debate the science of that one, we will do it. I'm sure there's somebody on Twitter who would argue that fact. Maybe they're in Australia. But Europe is heading into a winter. They will not have Russian gas. It's just a fact. I don't think Ukraine's going to all of a sudden come into play where the Russians back out of Ukraine. So this LNG, you're probably coming up here to the 160s. Anything under 150, I think you could buy in this. And then as we go into the winters, you're seeing it right here. I mean, if I just draw this at 150, you'll see it's clear. This is the price to buy over and under. Right there. You've gotten under, over, under, over, under, over, under, and you're still under. So you at 141, great buy. At 149, you're still fine. I think you get up to this 160. So you don't have a huge huge dividend, but you do have a good company. JEPQ, JEPQ. Now, this is one of those covered calls like SPY-I, which we went over the other day. But JEPQ has been a monster. Plus, you're getting, let me see, a 12% dividend, something like that. Let me see. JEPQ, it's basically the NASDAQ equity. You're getting a 9% dividend, but your growth in this one has been huge. 45 to 47, just in what, 2 months? I mean, plus you're getting 8% dividend. It's doing very well. I would like to see you buy it lower. I will be putting up a TrendSpider watch list of all the covered call indexes that I know of. So we can scan those. We can see good entries. We can see when to get in, when to get out based on the algorithm. We can use the 65-minute on that, but I'll be putting that in today. I like these on pullbacks. I don't like you to buy them and necessarily hold them. You can see when you get the dividends, read up on each individual one, but I don't think you're hurting yourself by getting in and out of these. Plus, you get a huge dividend. It's kind of like PXD. You can stay in PXD and collect an 11% dividend. Yeah, it hurts to lose the actual, the value of this one. But I do think that energy at some point comes back. So Oracle, I wanted to talk about, yesterday what started me with the PE was Oracle, looking at Oracle. Now it's gotten that button hook. I don't think that you buy it into here. And I've said, hey, I'm not sure. I think you could buy it long-term here and still be fine. Your ex-dividend date is coming up on July 11th. Not a huge dividend. But what I wanted to point out to you with Oracle was they have seen at all-time highs their all-time high is 127. You're trading at 120, 119 right now. But 127 is the all-time high. You're 5% away from that. But look at the insider sales just since June. When they started hitting that 125, 121, 120, that's over $800 million of sales from insiders. Mostly Larry Ellison, Lawrence Joseph Ellison, as I should say. But that's huge. I think you wait up until this one, comes back down to fruition. But what's interesting is it's holding up. This downturn here is because he sold $800 million. The company has a market cap of $328 billion. So it's like 2% of the actual, market cap that he sold. Motley Fool has added Shopify into their top. Basically, it's they say if you're starting a portfolio, these are the 10 stocks to do. Now, my dad, we looked at it yesterday. I think he pays $200 for $200 a year for Motley Fool. So I post the articles in the private Facebook group. So the least you can do is pay me $7 a month because I provide you guys with all the information from that subscription. But Motley Fool added Shop. I still think Shop under 60 is the way to buy it. I don't think you're doing yourself any disfavor by buying it here at 62 if you're looking to hold it long term. I do think that this one it's a good company with good products. The earnings, questionable. But I do think that you get up to 100 on this stock. That what they did recently was they cut their distribution arm. That's the cost. That's what was costing them. By the time they have their next earnings on July 24th, I expect to see their costs come down and them to start making money again. So I posted in the Facebook group the 10 stocks that are in there: Airbnb, PayC, Shopify, Tesla, Trading Desk, Amazon, Apple, Disney, IDXX, NVIDIA. I will put those in the newsletter. Subscribe to the newsletter. I will put that list of stocks. If you're new to investing, that's a list you should absolutely 100% be invested in. It's 10 stocks. So ChatGPT portfolio, they've been silent. And that's why I haven't brought it up on the podcast recently. They posted yesterday. It's back live. What I noticed yesterday when they started posting was there are comments from people who have gotten in and out of this, and they are severely underperforming the S&P. So I want you to be, again, they have 27. What they say is, due to the returns and the picks and demands of managing a $27 million portfolio, we haven't had time to post on Twitter. Well, that kind of makes sense. I mean, what they're doing is they're taking private money and they're investing it for other people. And so that's where they, 35,000 people they communicate with regularly. Twitter, nobody's paying them, so I don't blame them. It is interesting. One of the things that I found interesting was one of the picks from this week is SH, which is a pro share short of the S&P. And that got you in, looks like earlier this week, we got in at $14. It's at $14.17. HIBS right now is at $4.21. So it opened up at $4.21. Looks like it's taken a little downturn. So we'll see. But interesting that it picked there. I want to go over some picks here of recently. Roblox is under 40. Roblox clear, under 40, buy it. Doesn't have confirmation right now. Go on a shorter term chart stock chart, but I don't. If you want to buy it today, I don't think it's dangerous to hold it over the weekend. Roblox under 40, the RSI is at 41. The MACD is right on that oscillator line. Disney under 90. This is one, in my mind, again, this is one of the ones that Motley Fool says have in a core portfolio. It's at $88. This is kind of, you're seeing this bottom put right back here in December. Let's go back to the October. The October lows, where you got to October. This was just under 100, got back over 100. I'll be adding more. I think under 90 is not a bad price. It's tough to recommend because they do have a cost problem. But these are the only guys who will be able to get betting into. The second ESPN announces that betting, they're in a partnership with a betting platform like DraftKings, holy F, this one's going to take off. PXD is under 100, under 200, I'm sorry. I continue to say the 11% dividend, it's worth it to take a risk on this one in small doses. It's energy. I just don't know when energy comes back, but every time that oil goes up, this one starts to go up as well. It kind of teases us. Taiwan Semi, it's under 100. Well, it was under 100. It's over 100 again. So Taiwan Semi, I think you're good in buying chips. This one in particular, over anything under 100, I think you pull the trigger. Palantir, it has pulled back. And Palantir, I think you have an opportunity to get in when it finds confirmation. Look at this. The algorithm just got you out of Palantir with an 80% gain, $7.82, back here on May 8th. You're right now, June 23rd, so just under 2 months, 80% gain. Holy F. I know some people are still in this one. I probably would have gotten you out with that button hook there on June 16th, up around $16. I do think that this is a $25 stock when you get to it. BABA, with the AMR thing from SoftBank, I think this one, anything under 90, I think you pull the trigger. You can see clear bottoms here at around $80. Are you upset at getting it at 84? I don't know. I mean, I've been burned on this one before. I may get back in just because it looks too good. Starbucks is an interesting one. It's under 100 at $99.40. You can see there's a clear support at about 95 here. You got this one. I'll put the line in here. So you got three trend lines. 1, 2, and then 3. You hit 3 there. So 97. Their baristas are going on strike today. So CarMax, KMX, they reported earnings. They were good. It's up 10% in the market today. I don't know what that means for Carvana, but Carvana is one that was said to have be going bankrupt. They've been holding in there. I mean, this one at $7.34. If you got in at Carvana at $7.34, again, they were said to be going bankrupt, so most people were short on this one. But $7.34, you're at $24 right now. You're down 4% in the pre-market. This one got all the way up to $28 here. So I think that's an interesting one. I'll bring up 3M. I don't like this stock. They've got too many lawsuits against them. They settled with the forever companies, with the utilities, but there's still a ton of lawsuits out there. This is a falling knife. If you're in this company, I'd get out. I mean, just ethically, I just think it's a horrible company. So I'll leave it in there, but it's up slightly today just because they settled the lawsuit. Boeing. If you're in Boeing, I'd get out. Here's the thing. Their contractor, Spirit Aerosystems, and I think Joe would confirm this in the private Facebook group too. Spirit Aerosystems, who makes the fuselage for Boeing planes, their machinists just went on strike, so they've stopped making fuselages. Boeing has not currently, to date, pulled back their production schedule, but when they do, you're going to see it go down. This will be under $200, easily under $200 in the next 2 weeks. They are pulling back the making of their future. 80% of the workers at Spirit Aerosystems voted against the contract, so they're on strike. So I'd get out of Boeing. I just don't think it's worth staying in there right now. I think you can easily get back in under $200. So sell it, buy back in if you like it. Ford announced they'll be cutting jobs. I don't know if it was a report, but they'll be cutting jobs. The good news is, and this was just the Tesla bump when they announced the Tesla stuff, from 12 to 14. Big move. You're seeing that button hook right here. I think this is the secondary move that you're going to start to see. July 26th is their next earnings. By that time, I expect them to announce cost-cutting measures, and cutting the costs is what essentially Ford needs. Okay, so let's get into Brandon stuff, because Brandon just popped on and said good morning, so I'll high-five him. IONQ, it is up 10% today. IONQ, I still have no clue what these guys do. I don't think I've looked up the fundamentals on this. I know they're not making money. They're losing $71 million. It's a computer hardware company. IONQ, it is up 173% year to date. Just in our algorithm, it just got you out with a 69% gain. So maybe Brandon's still holding it, but it looks like it may be going for a second leg, a second run. Let's look at long term on this one. I am not in this one. I don't plan on getting into this one. I think he's YOLOing it. But IONQ, there were a couple of people. It's been nuts. What I want to show you is the 65-minute algorithm on this one, because I do think that this one could absolutely be traded in the 65-minute algorithm, and it will save you on the downturn. The good news is that if you bought 8 months ago, you're up 87% on IONQ. If you just bought and held. The algorithm makes you go in and out 91 times because it's that volatile. It makes you an average win of 5.97%. Your average loss is 1.79. So you're limiting your losses. Over 90 positions, over 8 months, you make 74%. The 65-minute algorithm is meant to protect you on day trades. And I showed it earlier on YouTube, where I have a 65-minute scan where you can scan any one of my watch lists and see which stocks are within a buy on the 65-minute algo. So I do want to make sure that you guys know that that's available in TrendSpider. If you sign up for TrendSpider, I give you access to all of this stuff. Highway asked on Facebook. Not the Highway in Philadelphia that ironically is opening, but Highway asked about Facebook PBR, which is Petro Brazil. It's basically a Brazilian oil company. I posted to his asking about it on Facebook. I posted an On the Tape podcast where Dan, I forget his last name, but he's on CNBC all the time. He actually talks with one of the guys from The Big Short, Danny Morris, I think his name is. He talks with him. He's heavily into this. And the reason he's heavily into this is because he believes that Brazilian oil is basically the outlier. Russian oil is pulling back. The Saudis are pulling back. So he thinks that this one is completely undervalued. Now, the dividend on this is 20%. So you're getting paid a huge dividend while it's going up in value. And it's going up big. You're up 50% on this if you just bought with the algorithm. The algorithm over 2 years makes you 15%, but you're up 20% if you bought 2 years ago and held. So he's a big believer in it. Go listen to that podcast. You can hear him talk about other Brazilian investments that they make with some of the inflation stuff. Just know it's foreign. I know nothing about this. I think it's a huge dividend. I have not been investing in it. You can look at the fundamentals here. The PE is 2. The forward PE is 5. The average target price is 13. Currently, it's trading at 14. I don't know that you necessarily get into this. You can see June 21st, Goldman upgraded it from neutral to buy without a price target. In June, JP Morgan upgraded it neutral to overweight with a $15 price target. In June, Morgan Stanley equal to overweight with a $16.50 price target. Insiders aren't selling. Go and read about it. I think it's got a lot of retail interest right now. I think it's getting pumped up. You got gaps all the way up in this. Just realize you're kind of taking a little bit of risk there. But energy, Danny made sense when I listened to that podcast. Now, Reed asked on Facebook, PYXS. I have no idea what this does, but PYXS, he specifically said, hey, it's Nancy Pelosi stock, which if you know the Pelosi's, Paul is the genius investor that always seems to invest in stocks or get out of stocks prior to legislation being announced. It's just uncanny how great an investor this guy is based on the news. PYXS, they're losing $108 million. It's a healthcare biotech company. It's up 93% year to date. My guess is Pelosi's kind of probably been buying at the bottom here. The low is 110. I bet he got it at 111. The high is $6.92. Probably that pop when he started buying it right around there. It's been taking a hit down. The average target price is $8.67, but all of that is from 2021. So take that with a grain of salt. Now, Pfizer, which is a 10% owner, bought on March 17th, 1,811 shares. The value is $5 million. So Pfizer put $5 million into this. Pfizer putting $5 million into a company like this. It is a super small company. They are losing $108 million. Their market cap is $108 million. Expect to get diluted. 11% short interest. Not huge, but large enough that I'd be afraid to get in. It's a Pelosi stock. You're taking it on the chin here. I do think that you have an opportunity to probably lose more money than you have to gain more money. So that would be my take on it. It's a super, super small cap stock. So Reed, I'd be careful. I don't necessarily follow the Pelosi's because I'm pissed off that anyone in our House or Senate can do this kind of shit. And it happens all the time. They absolutely should be up under insider trading rules. So scans today, UNH gotten, it's a new cross up 479. I think you buy this on, I told you to buy it under 460. I think it comes back here and covers all the way to 490. Are you upset that you bought it at 481? No. Is it going to go down to probably 470 again? Probably at some point in time. It's healthcare. You look at the weekly on this one, it's still in an upward trend. It's not even back to its 200-day. You're just capitulating here. It's a $500 stock at some point in time in the next year or two. So I'll sit in that one. I currently own it, I think at 485. Activision Blizzard on day 2 of the trial with Microsoft. This one's going to fill the gap all the way up here to 85. So 81, if you want to buy it at 81, you think it's going to hit 85, kudos to you. I've been saying all the way down here when it gapped down, when the EU said, hey, this is bad, this is not going to go through. I said they still get $3 billion when the deal gets thrown out. And the UK is the one that just bounced it out, but the EU approved it. So I don't think that this one, I think it goes through at $95, and at 81, you can cover that gap all the way up to 85. And if it goes through on July 11th or 12th, like the FTC thinks it will, then you get $95. Great trade. Great trade. So that's the podcast sponsors. If you are paying more than $25 a month for Visible, then go to the link tree or just look down below And you'll see, a link to the link tree, linktr.ee/daily stock pick. You'll see it visible right here. Get $20 off your first month of service. It's as low as $5 for the first month. That's the first sponsor. Second sponsor is TrendSpider. The link right here gets you 25% off. If you like my entries in white, the exits in green, hopefully, but there are exits in red, and performance trackers, you can get all of this. Tesla is a great example of the algorithm. Over 2 years makes you 113% in Tesla. You know what you make over 2 years, 24 months in Tesla if you just bought and held? 14%. It's got 25 positions. Your average win is 25%. And you're still not out of this current run. So if you like TrendSpider and you like this kind of stuff, sign up below. It is around $400 a year. So understand you do have to have a big enough account to trade. If you've got a $500 account that you're trading in, TrendSpider's not your thing. Go and get some free tools, hone your skills, and then once your account gets up to, I'd say between 10 and 15,000, I think you can comfortably spend the money on TrendSpider, and it will save you that amount of money. Absolutely, 100%. Sign up for the newsletter. Go read this note from yesterday. But the newsletter is, I think it's pretty good. Invite your friends. I will be starting paid content this weekend. Trust me, if you don't think that my advice is worth it, do not subscribe. I'm not looking to make money off of this. I accidentally turned on paid content, so I want to pay back the people who actually subscribed and paid with some type of content. So every weekend I'll be doing at least one newsletter just for paid content, and I'll make them archivable. So if you sign up, you can absolutely read it. Think of it like a book. You're going to read this kind of quote unquote PDF, and you're going to understand how I look at things, my system of looking at stocks, of finding stocks on TrendSpider, of finding stocks on FinViz, which is free. Again, if you want to join and you want to support me and you've made money and you don't want to tip me, just sign up for the newsletter. I think it's $7 a month or $70 for the year. So in my mind, it's not that much. I'm not putting it, $7. I mean, it's a fast food meal. Maybe get some chicken soup one day for a couple of bucks, bring a can of soup and pay me $7. So if you have any questions, hit me up. I hope you guys have a good weekend. And I will talk to you later. I will be getting rid of HIBS at some point in time today. And I probably will buy another stock. So I don't know. I'll let you know. Take care. See ya. Why do I get so freaking hot in here? Okay. I have to re-record my, let's see, indices check. I'm going to check on my account. I did really well yesterday because Apple was up. So I think I'm really down today. Let's see. I am down 0.86%. And the indices are down. The Nasdaq's down 1.1. So I'm doing well there. SQQQ was the trade. Oh, and look at this. HIBS has lost its momentum. So it got up to 425. I think I'm going to sell here at 420. Let me grab my laptop. I'm going to get out with a nice 5% gain, I think. Charlie, I'll look at Target. And let's bring up Boyle. I'll bring up Boyle too. Let me just trade this. Where's my fidelity? Yeah, Christian, I heard the same thing, and I think they brought that up um, on that webcast, that podcast that I posted. Hey, Christian, you're a part of the Facebook group. If you're not, let me know. I'll post the link to the podcast. Let me see. HIBS. Where's my Active Trader Pro? Sell. Do. Okay, now let me go over to. I gotta do my second lot, which is in another account. Oh, cancel. Oh man, log in. We're gonna do Jarvis Bronx 1. No, 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 no. There we go. And we're gonna go into this one. Positions. And we're gonna sell. Um, okay. I'm selling in two different accounts. That's why I'm taking so long. is it not filling, Fidelity? I want to get rid of this before I get screwed. Oh boy, Charlie, I'll go over target. I'm just trying to, let me see. We're going to have to update this one just to get out. Filled. Now let me see about the other one. Log in. And so made about $1,000 on that between the two. Not bad. Sorry. Okay, share export song to disk. I'm gonna put you over here. Here's my thoughts, Charlie. Target. I think it's hit a bottom. I think 130 is kind of the pivot here. You're seeing it kind of put in. If I draw this line right here, now let's draw this. This is 130. And so I think right there is kind of where I see it putting in a bottom. Now, you got your ex-dividend date. You got your earnings out here on right there. Now, if you pull back here, look at how many people are still holding at the 150 price. If we pull this, and these are volume shelves, back to where it started to actually go down, you're seeing the volume shelf up here at about 131 to 132. That's where the majority of people are buying. That's setting up a support zone. So I think that down here at about 126, I think it's setting up that support zone. If we go from a long version of this and we go back to pre-COVID, this was a $130 stock. Do you think it's a better stock today than when we were shutting down? Yeah, I think so. So Uber's up. God, Coke is up. And I got out of HIBS at about $4.21. So let's do this. Export. And I'm going to go over to YouTube. I'll put you guys on HIBS, maybe the big cam. Yeah, I got out of HIBS. I don't want to hold a triple levered ETF into the weekend. So I figured I'd get out of HIBS before the morning, the afternoon kind of either slump or catch up. I figured it's a good time to get out. Upload video. Select file. I'm going to do this. 623. Yep. Upload. And then we're going to go to Canva. Let me see what PayPal is doing. Is it above that? Yeah, it's below. Oh, God. Look at how PayPal just lost everything. Oh, well. I think the $61 was the way to buy it. But, again, I think it's an $80 stock by the end of the year. Let's see what Ulta's doing. Ulta is, that one gained. I'm losing 5 cents a share. Oh, no, I'm sorry. It's at 455. There it is, 455.10. That just updated. I think I'm at 450 or 455.50. We'll go into this one. And I'm going to update with... $6.23. Okay, and share. Man, I don't know if you hear that, but there is a dog snoring about 10 feet from me. And you probably can't hear it, but wow. We are gonna upload thumbnail. Green Gaming. Just make sure it's the right one. Yep. Nah, it's Daisy. Daisy's got the sleep apnea. See you, Sherry. Have a great weekend. Whew, 11 miles. I gotta go out walking. Your boy has had ice cream and M&Ms way too much this week. So, let's see. We're gonna look at this. Quick GarageBand. Save. New episode. Create episode. Browse. Podcast 623. Ooh. That's a tough call. For me, though, Joe, I'd probably go AMD. Even though I think Qualcomm, I mean, God, that's a tough call. The only reason I say AMD is because the only one challenging NVIDIA will be AMD. I just don't see anybody else challenging NVIDIA. But with that said, Qualcomm just has that dividend. Okay, we got that. We got that playlist. We're going to add it to the daily pod. We're going to say no, not made for children. Publish. And then processing, we're going to say transitions. What's the back room sound like? Yeah, it's a slow day. That's a good one. And we'll insert ad. Save episode. We're going to... God, you know... Go read my note, Joe. PE, I don't think matters right now. That's my take on it. I bought Ulta. What's HIBS at? Is HIBS continuing to go up? Did it hit that 425 that I was trying to get it at? Nope. I'm good. Sold at 420. 420, about 421, 422, I think is what I got in the two lots. Woohoo! God, look, Intel's back up. APLD, this is the Apple down. Yep. That's up a good 19%. Wait, I gotta look up ALPD. I gotta look it up. Let me see. Oh, title of the episode. What did I title this one? Six 23 podcast market update, I should say. Okay, publish now. Boom. Is Mara back over 12? Hold on, I'm gonna get out of here. Okay. Gonna get out of that. Dashboard. Where's my earn? Oh, let me see my AdSense real quick. Sign in. I think I was doing it on the other computer, but we're working on setting you up. F you. Okay, we're going to get out of that. We're going to go over here. We're going to get out of that. Okay. Mara's back up. Safari. Big cam. $12.11. I still think you cover. Well, it's not really a gap. See the VWAP here? That white line at 1026. I ain't holding Mara over the weekend. But with Bitcoin holding $30,000, I don't think it's a bad play. Let me see. What is APLD? Oh, it's Applied Digital Corporation. This is up 15%. I thought it was the short of Apple. PIK. TSLQ is the one. See, I said to buy it yesterday. And let's see. If somebody had bought it yesterday, it would have been, let's see, the morning candle. The low was about 30. So pretty good. You're at 33 right now. Here's Michael. Here's my AMD take on this. At 109, I mean here. Weekly. Look, good companies with good products, with good earnings and good management. That applies to AMD. This is a $150 stock. So at that 108 level, let's pull it back. Here, I'm going to show you the volume shelves. So if we pull it back to its high here in November 2021, you can see there's a support line right here at about 100. This line right here at about 118 was really kind of coming out here for the last couple of days. Now it's going to take a lot, because you're talking about billions of shares being added up to add a volume shelf. This is the largest volume shelf. Naturally, this should provide some type of support. You can see on the weekly, that 50-day bounced off the 200-day. It's providing support. The problem is that the RSI went way too high up here, at 77. It had to come down. So at 110, 109, I don't think you're doing yourself any disfavor. In fact, I may buy more now. I hate doing that over the weekend, but God, I mean, what are you going to do? Buy the AMD at a, let's see, AMD at a 26 forward PE, or are you going to buy NVIDIA at a 41 forward PE? I mean, NVIDIA has to grow into that. You're selling at price to sales. AMD is selling at 8 times price to sales. NVIDIA is selling at 41 price to sales. I think AMD, listen, I'll take a second place winner there. And I don't think 8 times, here, AMD 8 times sales. Qualcomm is selling at 3.19. And their PE is 12. And they have a 2.75% dividend to go along with it. AMD and NVIDIA don't have it. Well, NVIDIA has a dividend, but it is just minuscule. I think you're right, Joe. I think if I go over here and look at AMD, you know what I'm going to do? Let me see how much I have, because that's what I want to see. Let's see. Let's see. What's 3,766 minus 4,204?
It's negative 438.
But I made it's not negative, but I made almost $500 on that trade with HIBS. So on a $5,000 trade, $4,000 trade. What's 436 divided by 3,766?
The answer is approximately 0.00.
What's 476 divided by 3,766?
Sorry, I didn't get.
Let's see. What's 4,204 minus 3,766?
It's 438.
What's 438 divided by 3,766?
The answer is approximately 0.116.
Let's see. I'm going to put in AMD. I think I'm going to put in AMD at 108.99. Maybe I'll just buy it at 109. I got to see how much I have. So your answer, by the way, Michael, is yes. And the market's continuing to go down. Okay, there's my buy. I went in with you, Joe, on AMD. I put it in for maybe I should alter that. Oh, hey, hold on, I'm going into the other room. All right. Sorry, I had a mom was calling. Let me see. I think I'm going to alter my buy on AMD. Yeah. Oh, and this one's not updating. There it is. Did I get it? Yep. Got it. Okay. So I need to put in my notes, bought AMD. That'll go into the AMD. Okay. Boom. Yeah, Michael, just make sure you're subscribed. Always happy to help. But I do think, number one rule on this channel, though, Michael, is don't listen to a douche on the internet. And I do see, energy's just getting destroyed. Even clean energy, this has been, I own this in a retirement account. I should get out. I mean, it's just kind of going along this 200 day and all the way up here at 84. I mean, it's halved its value in a year. So, okay. With that, I am out of here. You guys have a good weekend. I will be doing the newsletter. I'll send that out in a few minutes. So, okay. I'll talk to you guys on Monday. Have a good weekend. If you want paid content, again, that newsletter, I'm going to do a paid newsletter this weekend with some learnings. Have fun. See you. Bye.